Hey everyone, David Edgerton here, The Edge in Houston Real Estate. I'm going to do a presentation on where we're at the halfway point of 2022 in the Houston real estate market. Now, I did a similar video at the start of this year, and I made some predictions on how I thought and what I thought was going to happen for the rest of 2022. And I must say, I was wrong on a couple of ideas. And that first idea was that the market was going to continue on a steady and somewhat strong pace for 2022 with modest price growth and nothing too crazy. Boy, was I wrong. I had no idea that the housing market would be quite so intense and such a seller's market for the first half of 2022 with low inventory, very low interest rates, and so many buyers out there looking for homes. Prices really increased quite significantly. It was not uncommon to have multiple offers, houses just selling within hours of it being listed and quite easily going for 10% over the asking price. It was an extremely lopsided market, very much a seller's market. But what I also didn't anticipate was the inflation as well as the drastic increase in mortgage interest rates. Right around June 1st, about a month ago, the market has really shifted and slowed down. And it's like you're driving in a car and you just slam on the brakes trying to stop as fast as you can. It has really shifted on a dime. Now, do I think we're heading towards a recession or something just devastating? No, I don't. But I think that we're going to be heading back to levels that we may have seen maybe before COVID. So let's take a look at some of the data. So first, let's just compare 2018 and how we've tracked along to 2022. Now, looking at the months of June, in 2018, there were roughly 27,000 active single-family homes listed in HAR. In 2019, that increased to nearly 30,000, but then started to drop quite significantly in 2020 and 2021. But you'll see the interest rates in 2018 averaged 4.5% and then have gone down since then, below 4 in 2019. And then really due to COVID and the Fed's decision to keep the economy going, rates in these, around 3% really spurred demand for homes. Combine that with sellers just not moving or not putting their houses on the market, that created this really low inventory where in June of 2021, seemed like an all-time low of just around 13,000 single-family homes for sale. But since this year, starting with, I think, the high increase of interest rates, now there's beginning to be more inventory. Now we're at almost 18,000 single family homes for sale, but we're still a long way off to pre-COVID levels of, in this nearly 30,000 homes for sale. Now, the prices have really gone up quite drastically. In 2020, the average price was 320,000, but in 2022, we're at 440,000. That's a 37.5% increase in prices. Now, I think a lot of these prices have gone up the most in the suburbs, and each market is different, but it is not uncommon for anyone's property to have gone up 30%. So around 30% increase over 2 years on average is fairly common. Now, the amount of new listings, there does seem to be an uptick in the amount of sellers now that are putting their homes on the market. 2022, it seems like this is starting to rise. I think maybe sellers are now thinking that this could be the top and it's a good time to make a move. This chart seems to be the most indicative of how the interest rates and the inflation is really starting to affect buyers. This chart tracks week over week compared to 2021, the amount of homes that are going under contract, meaning a buyer and seller have agreed to a deal and signed a contract. These are not yet closed. These are just the amount that are going under contract. There's been a significant drop in houses that are going under contract the last couple of weeks. And that is, my belief, is being caused by the high interest rates and just the general affordability of buyers. They just can't afford these homes right now. Closings, it looks like there's still closings that are happening somewhat on pace as 2021. I think that this is going to start to really veer off course on where we were in 2021. So I think that this is going to start to track lower, just like how the amount of pending transactions are over 30%. I think that instead of this being, 6%, we're going to start to get this well over 30% as well for the amount of closings. So the amount of sales appears that it will be slowing down. The amount of showings. HAR tracks how many buyers are seeing homes, and this has been down over the last, looks like a couple of months, around 20% lower than where we were in 2021. Interest rates, we're currently between 5.5 and 6% in interest rates for the last month and a half, probably. This is affecting how many buyers are in the market. Just overall inflation, it seemed that it really started to happen in 2021. This could have been caused with the higher home prices. And in 2022, we're even higher than we were before. I know that I'm certainly seeing it at the gas pump and food prices when I just go out to eat and see the menu prices. Everything just seems to be going up. Year to date of the stock market, a lot of people track the S&P 500. We're down roughly 20% from January 1. If buyers had their down payment invested, fully invested, they don't have as much for their down payment. So affordability is a challenge now for buyers with, prices going up 30% over the last few years, now with an increase in mortgage rates. If it going up 3% on your mortgage rate, that's essentially adding around 30% more to your monthly payments, which is significant. That's going to affect your buying power. So this will affect price growth, or in fact, it may completely stop price growth and stop all appreciation. And my guess is that it could be starting to track lower, maybe go back to where we were in 2021 at the beginning of the year. And so all the gains that we've had over the past 6 months, a year, that could start to go back down. So the housing market is cooling. There are going to be more houses for sale that are available. So the inventory will start to rise. The days on market, as those homes are sitting there with not a lot of buyers seeing them and not a lot of offers, slowly but surely, these sellers will slowly start to decrease their prices. So there's going to be more price reductions. There's going to be higher days on market, and there's going to be more houses for sale. Mortgage applications are down. The mortgage lenders are saying that the amount of buyers that are out there trying to put in applications for loans are down 17% year over year. So what are my predictions? I've kind of already been hinting at my predictions, but home sales volume will slow. Compared to the last 2 years, we're probably going to have less sales, more inventory. I think that there's going to be more homes for sale, maybe trying to get back to those 2018 and 19 levels. I'm going to start to see more price drops. If sellers are still pricing their homes as if we're in the highest of the comps, where that was in April or May of 2022 when rates were still in the 3% range, buyers just can't afford that with now 6% interest rates. So there's going to start to be more price drops. My prediction is that sales prices will probably fall around 5% off the highs. I think interest rates are still going to bounce around between 5.5 and 6.5%. However, it's still a great time to buy and sell. Renting is may not be the best option, especially long term financially. If you're a buyer, it pays to wait and be patient. If you see a house that checks all the boxes based on location and the features and the condition, and you feel that you could get a good, it's worth it to try to negotiate the best deal possible. Just do the best you can on the interest rate. And if rates ever dip down lower, work with a mortgage lender who can get you a good refinance for that. Sellers, it's important to price it right. Homes need to be in a show ready condition. It's more important than ever now to really think about quality listing and getting your home in tip top shape and be ready to hopefully convert any buyer that comes in. Hopefully they can become the new owners and make a sale. I hope you found this analysis informative and insightful. If there's any questions, if there's anything I can do, please reach out and I look forward to talk to you about that. Thanks.